Welcome to this week's Money Metals podcast, helping gold and silver investors during these turbulent times. Now, here's this week's market wrap with commentary and analysis from the low-cost precious metals dealer voted best in the U.S., Money Metals Exchange.
Welcome to this week's Market Wrap podcast. I'm Mike Gleason. Last week, we heard the first half of an interview Money Metals President Stefan Gleason did during a recent 360 Gold Summit. Today, we'll hear part two of that interview. Stefan gives some important warnings to gold and silver investors, discusses why he favors one of the precious metals over the others, and also talks about some really important things to consider when selecting a precious metals dealer. Don't miss the eye-opening conclusion of Stefan's interview coming up after this week's market update. Precious metals markets kicked off trading for the third quarter on Wednesday by posting modest declines across the board. However, the technical bigger picture for gold and silver still looks strong after the metals recorded impressive gains in Q2. Gold finished out the quarter trading at its highest level since 2012. That has bulls anticipating new all-time highs for the monetary metal in the near future. As of this Thursday morning recording, gold trades at $1,783 an ounce and is up 17% for the year. Even though gold is outperforming the stock market in 2020, it isn't getting much attention from the Wall Street-centric financial media. We suspect public interest in precious metals will begin to surge once gold hits a new record and trades over $2,000. Then the media will be forced to start paying more attention to the sector. Turning to silver, spot prices currently come in at $18.16 per ounce, with the white metal showing a 2% gain year to date. That belies the fact that silver has surged over 50% since the March panic bottom. Silver has also significantly outperformed gold over that period. The gold-silver ratio has narrowed from an unprecedented extreme of 127 to 1 to 98 to 1 today, with investors being able to obtain 98 ounces of silver for about the same price as a single ounce of gold. Silver still represents a compelling value proposition within the precious metal space. Money Metals Exchange currently has ample inventories of most silver bullion products. Bullion premiums are also a bit lower compared to where they were this spring. With Independence Day coming up on Saturday, it's an opportunity to reflect on America's sound money foundations and how far we have since strayed from them. Thomas Jefferson once said of fiat money that it, quote, is liable to be abused, has been, is, and forever will be abused in every country in which it is permitted. The author of the Declaration of Independence believed that precious metals were a necessary foundation of a free and fair economy. The founders specifically wrote gold and silver into the U.S. Constitution as the legal tender of each of the states. They feared that concentrating power in the hands of a central bank would pose a grave threat to the liberty of the people, but even their worst fears have been far exceeded by the Federal Reserve's recent QE infinity power grabs. The Fed has made the entire economy dependent on it and controlled by its arbitrary decisions. Central bankers and politicians together have rendered the average American a permanent financial slave to accumulating debt obligations that can never be paid off in a lifetime. Instead of rising up in anger against the corrupt central banking cartel that is actually oppressing them, some Americans have been duped into attacking their own history. Big banks and big tech companies are literally pouring millions of dollars into groups that are fomenting racial and social unrest in cities across the country. It's culminating in the toppling of statues that the mob finds offensive for any reason. It was never really about slavery, and the mob was never going to be placated by the purging of Confederate symbols. The war on history is now targeting Abraham Lincoln emancipation statues in Boston and Washington, D.C. These monuments to freedom were originally erected with the support of freed blacks, but today's cultural revolutionaries disapprove of the way emancipation was depicted by those who actually witnessed it, and so they demand that it be erased from America's historical memory. Their end goal is to completely wipe out American history as it was understood by the people who lived through it. The only approved history will be that which can be seen through their ideological lens. By serving any tangible connections between Americans and their past, we will be left demoralized and easier to control. For all his faults, President Donald Trump seems to understand what's at stake in the war on history. On Wednesday, he vowed to veto a Senate bill that would erase the names of the Confederate generals from U.S. military bases. One of them is named for Robert E. Lee in honor of his widely praised generalship and character. Like Jefferson and Lincoln, Lee opposed slavery on moral grounds And at the conclusion of the war between the states, General Lee was one of the strongest voices for bringing the country back together in the spirit of unity. Today, some fear that deepening divisions in America could cause the Union to break apart all over again. The upcoming election will certainly be contentious. And depending on the outcome, violence and unrest in the streets could escalate. Regardless of who wins, America's Fed-fueled debt crisis will only worsen. The only political solution in sight for record-high budget deficits is to paper over them with more borrowing backed up by unlimited Fed bond purchases. In other words, more U.S. currency will have to be created out of thin air by the trillions. Inflation will become a bigger problem. Then, perhaps, an all-out currency crisis will hit as Americans and global holders of dollars lose confidence. In the meantime, you can take steps to prepare yourself financially for more currency debasement ahead. You can declare your independence from the inflationary fiat system by putting a portion of your finances on a hard money standard backed by physical gold and silver. Well, now, without further delay, let's get to this week's featured interview of Money Metals President Stefan Gleason as we listen to the conclusion of his remarks during the 360 Gold Summit, a discussion about all things precious metals. We start off where Stefan answers the important question about how to select a precious metals dealer.
You want to be careful about who you're doing business with. You want to do a little research. Probably start small with that dealer and see how it goes. See how the service is, see how the delivery is. Now, another place to acquire precious metals would be from a local dealer. You know, Money Metals Exchange is a national dealer, and there's several other good national dealers. Local dealers are a little bit more sort of unknown. Some are very good, some are not. You know, they may not be as well equipped locally to detect fakes, which are not a big problem, but they are out there. And there may be less education component involved. But look at your options. Obviously, our customers are buying from us. Many of them bought locally and then changed to us.
That's a really interesting observation, with the sales tax. When you think about it, you're actually exchanging one form of currency for real money, and you're not buying any, you're not selling anything. You're
Right.
exchanging.
Right. That is extremely concerning subject. That, okay, as you pointed out, you're changing one form of money, paper, U.S. dollars or coins, for another form of money that's recognized by our Constitution as money. Article 1, Section 10 of the Constitution sets up gold and silver as the only money that's supposed to be accepted in the states. And we've obviously got away from that. So the idea that you would have to pay sales taxes as though it's some sort of good as opposed to money. Could you imagine, if you went to the bank and had to pay sales tax to break a $10 bill into a roll of quarters? I mean, that's basically the equivalent. So gold and silver is disfavored by the sales tax laws in many states. And then at the federal level, you have to pay capital gains taxes when your gold and silver goes up in dollar terms, but it may not have really gone up in the context of purchasing power. What happened was the dollar went down. So it's kind of an example of the inflation tax. You're being taxed essentially through the capital gains tax on the inflation that the government is creating. And so these are the kinds of public policies that we're working to spotlight and hopefully change over time, and that is to repeal these sales tax laws that are discriminatory against people exchanging one form of money for a better, more trusted form of money. And then, of course, the discriminatory capital gains tax. And unfortunately, it's even at a higher rate than, say, a stock. Long-term capital gain on gold bullion is taxed at 28%, and not 15% like you would with a gain in a stock. So there's definitely some problems. We can get into this in a minute, but that's one of the advantages of holding precious metals in your IRA is that you can buy and sell without having to pay those gains every time.
Is there anything more important than choosing the right product and getting it for a low price?
The most important thing is getting delivery, and that means getting your metal. And I would say that in some cases, the lowest price can be a red flag. If somebody's selling gold and silver for below its actual value, there's probably something wrong. I mean, we recently ran across somebody who had bought some gold from a Bitcoin exchange, and he bought it at a discount to its market price. Well, that's kind of a red flag. Gold and silver is not at a discount to the spot price, particularly on the buy side. So The lowest price is not necessarily the best, safest place to go. Obviously, there's some very good low-cost dealers, including Money Metals Exchange. But there's also been horror stories of, low-cost dealers. And I'll mention one. It went out of business, tolling company, and they were super low, no service, almost kind of mean to their customers if you dealt with them. But eventually, at one point, about 2 years ago, hundreds of people stopped getting delivery. And something like $20 million worth of gold and silver was never delivered. So getting a low price is no good at all if you're not actually getting your metal. So the most important thing is working with somebody and getting what you paid for.
Very true. How does the average person trust the dealer or organization that supplied the coin or bullion?
Well, the first thing is doing a little research. You should always do that with any kind of purchase. You should know who you're dealing with. When it comes to precious metals dealers, the first thing I think, look them up on the BBB. See if there are complaints. See how they've handled those complaints. Everybody probably can have a complaint, but how they've dealt with those, how many they have, what kind of rating they have, that's one way of doing the research. There's another site called bullion.directory, which has reviewed hundreds of companies across the globe, and we were honored to have been named Precious Metals Dealer of the Year in the United States last year by that ratings group, international ratings group. So those are two things you can do to research, the BBB and bullion.directory, and that's literally the web address, bullion.directory. The other thing is size them up. Look at their website, look at the content that they have. If they have an email list, get on their email list, and start small. If you're worried about, you're not 100% sure, well, buy a small amount and just see how it goes. See how good the communication is. See if they provide you with transparent pricing and fast delivery. Do they confirm that they got your payment? Was their invoice exactly what you expected? Was it packaged well? Was there pride put into the way they handled everything with their customer? And if you have a good experience, that's a really good sign. Obviously, it's not a guarantee, but you really need to pay attention to the people you're doing business with. And that's just as much, if not more, the case when it comes to precious metals.
What sort of considerations are important to make before and after acquiring?
Well, I would say that there's a couple things that I would emphasize. One is, what are you going to do with it when you get it? Where are you going to put it? How are you going to store it? And most of our customers probably keep it somewhere in their house. A few will put it in their bank safe deposit box. Some will store it in a depository or at a Brinks facility. Some will put it in their home safe, but some will hide it, in other sort of unpredictable places. So if you have a lot of precious metals, and you probably want to have some of it stored remotely, just because that's a lot to have in your house. I do think that everybody should have the ability to get their hands on their gold and silver, at least some of it, very quickly, if they need to. So storage is one consideration. Some people are reluctant, and I can understand why, to store it in their bank safe deposit box. In fact, the banks are part of this war on cash and even war on precious metals. Some banks are saying you can't hold gold and silver or cash in your bank safe deposit box, so you may be banking with one of those banks. But there's also concerns from back in the 1930s. FDR issued an executive order banning private gold ownership in America that, some people felt like the gold that they had in their safe deposit box was being disclosed and potentially seized. That never actually happened, but most people turned it in voluntarily, or many people did. But there's less privacy, perhaps, if you hold it in the bank. And so I think, people rightly are a little reluctant to do that. The other thing is, in addition to figuring out how you're going to store it and where you're going to put it, is really to think about the responsibility that you have as a precious metals owner, or just as a person, to keep your financial business to yourself. A trusted person or a spouse, certainly you should be aware of what to happen if something happens to you, but you shouldn't be talking about how you bought all this gold and silver, bringing out your collection and showing it to everybody that comes and visits. There's been, unfortunately, some really horrific situations where people have not kept their mouths shut, have been, talking way too much about what they owned and found themselves with a home invasion or a robbery. And so, that's the other thing. So figure out how you're going to store it, and also discipline yourself to keep your financial business as private as possible.
Very good points. How can the average person best understand appreciation of his holdings or the upside value?
Well, the first reason to own gold and silver isn't necessarily for these spectacular gains, although I think you're going to see those, at least in dollar terms. The first reason is to own it as insurance and as a hedge. But particularly with silver, probably also with gold, there's a huge potential upside, even in real terms. And right now we're seeing negative interest rates emerge in Europe. We're seeing zero interest rates here in the U.S. So one of the big knocks on gold and silver is, well, it doesn't pay any interest. Well, neither does the dollar now. And then on top of that, you actually have the devaluation of the principal when you own dollars. So gold and silver is becoming a very attractive asset, and that's particularly been evidenced in the last few months, and gold and silver have done extremely well. So there's definitely some real potential upside to gold and silver. In terms of when to get out, I think that you probably want to be owning gold and silver forever, a certain amount. But if you're more of a speculator and you have larger amounts, then you probably do want to be looking for opportunities to sell over time. But I would say right now is a buying opportunity. Down the road, you could see silver at $100 an ounce or even higher. Gold could be several $1,000s an ounce before this is all over, particularly if the devaluation continues, and maybe you'll want to lighten your holdings. But right now, I think you're wise to be in the accumulation mode. Unless you need the money, just you need to liquidate for other reasons.
That makes sense. I guess related would be, when might an average person consider liquidating his holdings? Are there any solid event types that might precipitate liquidating all of what you have versus only some of what you have?
If you see the U.S. government live within its means and the debt goes from $18 trillion down to zero, that might be a good time to seriously lighten up on precious metals. I personally don't see that happening. I don't think most people do. I think we're kind of locked on a path here. So I think there's always going to be a significant role for precious metals in your portfolio regardless. But perhaps if you saw an outbreak of sanity in Washington, D.C. and around the world, and peace emerging and all these geopolitical things simmering down and terrorism going away, and I think that it might be time to seriously consider selling a fair amount of your gold and silver. But we're not in that situation. The way to approach this is to not try to pick a bottom or a top. It would be accumulate over time in smaller amounts. Don't go all in, and don't sell all at once. So I'd look at this as a way of just, getting on a plan and slowly and steadily increasing the number of ounces that you own. And then if we get down the road and you do see things changing, and 40% of the American people are talking about, you're going to you're getting your shoes shine, and the guy's talking about owning gold and silver, well, maybe that's the time to start selling. But we're nowhere near that kind of situation, and most people are dangerously exposed in not owning any. So I would get on a monthly plan and just accumulate. Now's the time to accumulate. Down the road would be a time to potentially disgorge some of your holdings, or if you have a need for it, you're in retirement or you have some big expenses. Obviously, you don't want to lock up all of your available cash in precious metals. Just do what you can over time to accumulate, and I think you'll be rewarded for it.
And somewhat related in terms of best places to get it, what about best places to liquidate it? Is there a type of list of would-be investor might consider comparing against or going to?
Well, usually, and certainly the case with Money Metals Exchange, usually you can sell to the same people that you buy from. We'll buy anybody's gold or silver coins, bars, and rounds. We obviously check it and ensure that it is what it is. We make sure we have it in our facility before we pay the customer once we verify it. But we buy back, and we love to buy back. And unfortunately for us, most of our customers are just buying from us, and very few are selling to us. So we actually have to buy from mints and wholesalers and the U.S. Mint and so forth. We'd love to buy more of our inventory from our customers because obviously we're buying from a middleman. We do make a market. Probably only about 5 to 10% of our inventory is sourced from our customers. We're eager to buy, and we offer probably the highest or among the highest buyback prices of any of our competitors. So we're as eager to buy from our customers as we are to sell to our customers. And that's probably the case with most dealers. And we're not retailers, we're dealers, and that means that we both buy and sell. So you probably would go back to where you bought it, but you don't have to. I mean, we buy stuff from people that they bought elsewhere all the time and are happy to do so. The items that we deal in are very standard, recognizable, liquid, And some people may want to sell to their local dealer, and that's fine too. They want to walk out with the cash that they may not get as good a price, but it depends on what your priorities are. So there's no problem selling your precious metals. And that's a very good question, because a lot of times people say, well, how do I sell it? What do I do with it? It's really just about as easy to sell it as it is to buy it. You contact a dealer or walk into a dealer shop, and they offer you a price, and you give them the metal, and they pay you. It's that simple. So it's about the same process in reverse as when you buy from us.
I'm going to switch gears just a little bit here. How about other precious metals like platinum, palladium, and et cetera? Are there times when an investor should be considering acquiring those precious metals, or vice versa, liquidating the same if they're already held?
Well, platinum and palladium are the other two major precious metals. There's rhodium, for example, which is even less sort of considered an investment asset. Platinum and palladium are still a very small part of the precious metals market. There's less of it, I should mention, but it's not as big of an investment asset. It's more of an industrial asset. So platinum and palladium are used for catalytic converters, diesel and gasoline catalytic converters. And so with automotive demand, for example, platinum and palladium can go up and down based on what's happening in the automotive market. But it is also a financial asset, and there's ETFs now, and there's physical bars and rounds and coins of all of these, including platinum and palladium. But I would definitely not get into those until you've already got a significant, or at least a reasonable holding of gold and silver. Those are the two that you want to start with. Platinum and palladium is a little bit sort of down the road. But in terms of the upside, again, a lot of it's driven by industrial demand, but they are also undervalued versus gold. As I discussed earlier, silver is way undervalued versus gold historically, both in recent history as well as longer-term history. But platinum and palladium are undervalued. Platinum is way below the price of 1 ounce of gold, and it's typically 1.5 to 2 times the price of gold over time. So platinum is way undervalued versus gold. But again, that's really not something to jump into until after you already have a meaningful holding of gold and silver.
It also sounds like something that you probably wouldn't do until you better understood the market and price swings and so forth of the precious metals in general. What about owning precious metals in your IRA? How does that work? Should you own the physical metal, shares of metals backed by ETFs?
Yeah. Well, ETFs, again, if you want to trade and you want to do it in your stock account, it's convenient. But there are these precious metals-backed ETFs. They're really a proxy. You don't own direct title to the metal. You own shares of a trust that supposedly owns the metal, and then there's a whole series of custodians and sub-custodians and sub-sub-custodians involved in that kind of instrument. So if you're buying gold and silver as insurance, then why introduce counterparty risk into something that's supposed to be your safe asset? And there are reasons people want to buy that. Certainly it's convenient, but it's not necessarily cheaper than owning it and storing it and paying the storage fees yourself. There's still fees involved in the ETFs. I don't think that that's really something people should be doing. They should be buying physical gold and silver that they have direct title to.
What sort of things or education can the average person do for themselves to be better prepared to consider precious metals investing?
Well, absolutely. And this is something our company, Money Metals Exchange, is really big on, and that's education and content. We want our customers to be well-informed. We want to keep them updated. So there's lots of websites out there, but a great place is to go to moneymetals.com and get on our email list, and we send out 2 or 3 informative articles about the markets each week. Pay attention, get a little gold and silver in your hand, start thinking about it, start thinking about what it means, compare it to paper money. And it's interesting, the first time I had gold and silver in my hand 20 years ago, it really got the wheels turning. Like, what is this fiat money? What is this Federal Reserve note? Why does it have value? Why do people accept it? And compared that to this beautiful, timeless metal of gold and silver, and it really gets the wheels turning. And that opened up an education process for me. I think it does for a lot of people, and we think the best customers are the best informed, and that's certainly what we strive for. I want to mention precious metals IRAs. That's one thing that is an area where people might be best able to put money into precious metals because they have IRA accounts. There's something called a self-directed IRA, and you can set up an account with a self-directed IRA company and then work with a dealer like us And with a depository, you can directly hold title. Your IRA can directly hold title to physical metal inside of your IRAs. That's another way of getting into this market that we definitely encourage people to look at.
A lot safer than speculating in the stock market, that's for sure. Is there any method to the madness in how the average person might approach what he considers owning or holding? When I say that, for example, is there any sort of 80-20 type of rule or rules of ratio for gold to silver holdings?
I would say that the more likely you are to need to access the gold and silver and turn it into cash or liquidate out of it, the more likely that's the case, probably the higher percentage that you're going to want to have in gold. Gold tends to be a little more consistent. It's rising, but it's less of a roller coaster. Silver can be quite volatile when priced in dollars. And of course, some of that's just the volatility of the dollar itself. But I would say if you're looking at a 3 to 5 year horizon, then definitely favor silver. You're going to own gold and silver for a year or two and think you might need to liquidate out of it. And then perhaps you should favor gold and have a majority of your funds in gold. But this isn't something that you should be buying and selling like a stock. This is something you should be accumulating and not necessarily looking to liquidate it anytime soon. I mean, it's there if you need it. Don't necessarily plan on buying gold and silver if you think you're going to need the money in 6 months. There are some transaction costs involved, not significant if you go to the right places, but that's just something to keep in mind. But going back to what I said earlier, silver is definitely the more potentially explosive upside metal. So as long as you're not looking very short term, I would definitely have a majority of your funds in silver, but make sure you get some gold.
Very good. Well, we're running up against kind of a time constraint here, and I wanted to thank you for joining us today and offering all of your just excellent insight and observations and answers to all the questions that we've thrown at you today. Before we leave, though, I'd like to offer you, let people know how to reach you and contact you on Money Metals Exchange.
Thank you so much for the opportunity, and hopefully I've shown education is a big part of what we do at Money Metals. I think compared to other dealers, that's one of our very strongest differentiating factors. Go to moneymetals.com, look at the products. Most importantly, get on our email list and let us continue to educate you about the market. And we also have a monthly savings plan, which you can get into, where you set up a certain amount each month where we debit your bank account or whatever your instructions are and send you on a steady schedule gold and silver. And that's a great way to accumulate, kind of put it on autopilot. So that's available at moneymetals.com as well. But I'd certainly really appreciate the opportunity to talk about this important subject and also about our company.
Well, thank you for joining us today. And folks, thanks for listening in, and we hope you guys have a great day.
You've just heard the conclusion of Stefan's interview with Pete Fettig during the recent 360 Gold Summit. We hope you enjoyed it. If you happen to miss the first half of the interview, be sure to check it out either on the moneymetals.com website or by downloading it on iTunes. Well, that will do it for this week. Please check back next Friday for our next weekly Market Wrap podcast. Until then, this has been Mike Gleason with Money Metals Exchange. Thanks for listening, and have a great weekend, everybody.
Thank you for joining us for this week's Money Metals podcast. Be sure to come back next week. And don't forget to subscribe to our podcast through iTunes for answers to all of your questions, or to discreetly and securely buy or sell gold or silver coins, bars, and rounds. Call 1-800-800-1865 or visit www.moneymetals.com. Our knowledgeable and no-pressure specialists are standing by between 7 a.m. and 5:30 p.m. Mountain Time, Monday through Friday. Or you can lock in your order online, 24 hours a day, 7 days a week. Again, visit us at www.moneymetals.com or call 1-800-800-1865.